Hello, ladies and gentlemen. Happy new month to you all. So excited to welcome you all to another promising edition on the Forex Morning Mastery. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's the new week, it's a new month, and in fact, we all know how important such days are as key players in the market will be re-strategizing ahead of the new month, reassessing their portfolios and recalibrating, reassessing, and trying to position themselves for the next move. And this usually comes with some level of volatility, especially in a week that is laced with a bunch of high impactful events to look out for. So it's good. It promises to be an exciting session, and in fact, I'm looking forward to a positive week up to as well. Today, as always, we are going to be taking on the three financial assets on our watch list, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD. Now, during the course of the weekend, I wasn't able to share publicly my ideas on the GBPUSD due to the limited time I had. I only shared that on the XAUUSD. So today we are going to be looking at the GBPUSD from an holistic standpoint, doing a top-down analysis on that asset, and of course we are going to be doing the same too on the USOILSPOT. So I encourage us all to stay tuned in as we have very insightful and simple trading setup that we are going to be using to navigate the current market structure today. For those of you who are actually joining us for the first time and wondering what this is all about, what is it that we really do here on the Forex Morning Mastery? Well, the Forex Morning Mastery is a platform. First of all, I would like to clarify that this is not a signal service platform, but instead an avenue where we all come together to have a deeper understanding into the current market dynamics, and of course use the information we can come up with here to make your own independent trading decisions. And my purpose here is to help us to navigate through the current market structure through the lenses of the fundamental and of course the price action based technical analysis. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help in improving your independent trading decisions and of course strategies. We do this 3 times in a week: Mondays, Wednesdays, and of course Fridays. So I look forward to seeing more of you, and I encourage you to engage in the comment section. You can ask me any question as regards to the financial market. I'm here and willing to be of help in that regard. And please, if you have found this content helpful and useful in making your independent trading decisions, I will really appreciate your support by giving the video a thumbs up. Your likes are very, very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial as well. So thank you very much, guys. I see a bunch of comment right here from C40. Thank you very much, C40, for your support and for your key insight into how to improve this community. Thank you very much. Good morning. Okay, glad to have you here. I also see you, Edward Daphine. Is this my first time seeing you here, Daphne? Good morning to you. Glad to have you around. Hello, namesake Sheriff Abdukadiri. Good morning to you. I'm also glad to have you around with us this morning. Well, I had a very good weekend, and I trust you also had same too. I see you, Constant Tamaklo. Good morning to you. Fluoride, good morning to you too. Glad to have you around with us this morning. I hope we are pumped up and ready for the new month. So with that being said, here we will be diving right into the business, and as usual, hello John Alabi, I see you too. Good morning. So we are going to be diving right into the business, and for those of you who have been with me for a while, you know how we do it. The first thing we want to be doing is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are looking at for this week, we are going to be focusing on economic features from both the United States and the United Kingdom. Of course, this economic event will definitely be influencing the sentiment around this asset we are looking at. And for usually we look out for high impactful event, but on days when we do not have any high impactful event, we usually include some mid-tier economic features so that we can have a broader view into what majority in the market will be looking forward to today. Now, for today, Monday, July 1, we have only one high impactful event, and I would love to include some mid-tier economic features as well. Let's see what majority will be looking at for today. So if we include mid-tier economic features, still we do not have any other one, so we are only going to be focusing on the ISM Services PMI report, which is coming up. What time is that? It's coming up in about 5 hours, I guess, 5 to 6 hours from now. And for those of you who are not familiar with this or who do not really understand what the ISM Services PMI is all about and how influential it is to the financial landscape, well, you see this data here that will be released in about 5 hours from now is considered to be another leading economic indicator in the United States. And of course, it goes further into measuring the health of the manufacturing sector by surveying purchasing managers on various business activities. Now, the anticipation of this data can influence the sentiment in the market as it provides insights into economic expansion or contraction. And of course, we all know how the manufacturing sector is considered to be a sensitive sector in the United States. So we have a PMI reading which ranges between 0 to 100 for all these PMI readings, and anything above 50 is indicates expansion, potentially leading to positive price action and a stronger currency, especially for the US dollar we are talking about here, while a reading below 50 may result in the opposite effect as it suggests a contraction in the manufacturing activity. Now, if we look at the previous month, so this is where we are going to be focusing on the 1, 2, 3, the third one right here, and look at what we had last month. For the month of May, it came in at 48.7, lower than the 50 mark. So there's been a contraction in the manufacturing sector in the United States, and based on what is on ground right now, economists and market participants are projecting a 49.1, though a little bit higher than the previous data, but still below the 50 mark. So it's not really an encouraging data at all. And this is coming on the back foot of sluggish economic data from the United States in the last couple of weeks. And for those of you who have been with me for the last couple of weeks, remember we've talked about how the US economy has been churning out not too impressive economic data, except for, was it the previous Friday, the upper Friday, where we had a higher than expected PMI reading. Except for that, the data hasn't been very impressive. Now, last week we had the GDP reading from the United States, which came in just 1.4% expansion, just as the market expected, showing us that though the economy is expanding, but at a slower pace. Now, this is beginning to incite the sentiment that Federal Reserve are likely going to be cutting interest rate anytime soon, despite all the hawkish remarks and speeches from Federal officials and even the Fed chairman following the interest rate decision a couple of weeks ago. Now, from this information we have here, the market participants are divided into two extreme halves. We have those who believe that Federal Reserve is likely going to cut interest rate anytime soon. In fact, there are over 89% of them based on the recent CME Fed Watch tool. And then the other half are those who still believe that interest will be kept higher for an extended period of time, following speeches from Lindsay, Wallace, and the likes, and the Federal Reserve official likes during the previous week. So we are caught within a contrasting view in the market right now. So what we are going to be doing today is to run through the chart and look at the market drivers that will be influencing the sentiment in the market, run through the chart through the highs of price action based technical analysis to understand the behavioral patterns of market participants in this market, and of course use that information to understand and strategically position ourselves for the next move. So with that being said, here let's dive right into the business. And as usual, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And on the USOILSPOT, we've done pretty well in the last couple of weeks. Since the beginning of the month of June, we have been buying this asset, except for some couple of times when we had some selling potential, but it has been more of buying this asset as US oil prices hit a 2-month peak during last week trading session at around the $82.35 area. And since then, we saw price drop significantly to the downside on Friday following the softer US economic data. Now, the question as we head into the new week is, will price continue to rise, or will this bearish momentum we saw on Friday incite a massive sell-off to the downside? Now, before we go into the technical implications of what the market participants are doing in this market, it is important for us to also take into consideration the market drivers for the US crude oil market. That is, we want to know what is really driving the price behind the scenes. Now, one of the major things we will say here, considering the strength of the US crude oil market in the last couple of months, is the persistent geopolitical risk from the ongoing conflict in the Middle East, and of course the Ukrainian attacks on Russian refineries continue to raise concerns about supply disruption from these key oil producing countries. Now, if you've been following the Israeli Hamas situation, recently Israeli are beginning to open a war front against Hezbollah in Lebanon, so there's likely going to be an escalation in that area, and this has been going on for about days now, and we've seen some couple of attacks from both ends in the last couple of days, and this is not helping matters at all, as it could draw Iran, who is one of the major supplier of oil in this region, into this conflict. Then besides that is the Ukrainian attack on Russian refineries, which is affecting the production of oil from that particular country, and we all know what this does. Whenever there is disruption in oil supply, the chances are that price will rise due to scarcity of this oil. So this tends to push the US crude oil on a positive stance. Now, the other aspect that we are also going to be looking at is the expectation of peak summer fuel consumption, and OPEC's cuts in the third quarter could also lead to global oil market supply deficit. Now, we are right into the summertime, which is peculiar with traveling, holidays and the likes, and this time around we usually see increase in oil consumption, and when there is increase in demand, what happens? Price tends to rise. Then another factor behind the scenes, which is more economical, is the US personal consumption expenditure report, which came in on Friday, called the US Core PCE, which confirmed that there is a disinflationary trend, and this has led to increased bet for a September interest rate cut by the Federal Reserve. Now, this development has pulled the US dollar away from its 2-month high, and I know some of us may be asking, how does this affect the US dollar? How does inflation affect, how does the US dollar affect the US crude oil? Let me simply put this and repeat myself over again, because I know there are newcomers amongst us. Now, the US oil spot is a US dollar denominated commodity, and it is understandable that whatever happens to the US dollar will definitely rub off on the US oil spot. Now, if the US dollar continues to rise in value, then the US oil spot becomes very expensive for other currency assets to buy, because they will need to convert their local currency to a much more expensive US dollar before they can buy the US crude oil. Now, this makes demand reduce. It reduces demand in the market, and when demand is reduced, supply continues to rise, and what happens? This exerts selling pressure on crude oil prices. So this is one factor that is very, very important for us to understand. Now, based on the recent US core PCE report that came in on Friday, we have a situation now that shows that inflation in the United States is gradually dropping to its targets. Now, if this continues like this, there is a high chance that Federal Reserve will cut interest rate. And when they cut interest rate, a lot of investors will pull their funds out of the US dollar, resulting in a crash in the US dollar. So this may influence the sentiment in the market greatly. So if this continues, and tomorrow we are going to be looking forward to the Fed Chairman's speech. Everyone will definitely want to listen to what he has to say as regards to this recent development. And of course, whatever he says will be giving us an insight into the future monetary policy decision of the Federal Reserve. So if interest rate tends to remain higher for an extended period of time, it will affect the US oil spot and it could drop to the downside. But if the narrative of a potential interest rate cut stays persistent in the market, there is a high chance that the US oil spot will continue to rise to the upside. Then one other factor that is going to be influencing the crude oil market this week is the data released over the weekend from China, indicating that they are also experiencing some economic challenges at this point in time. So the manufacturing activity reports that came in over the weekend fell for a second consecutive month. So the manufacturing sector has been struggling in China in the last 2 months. With the report that came in May wasn't that impressive. Same thing also happened for the month of June. And now, how is that going to influence the price of crude oil? Well, we should all understand that China is considered to be the world's second largest economy, and it's also the world's leading importer of crude oil commodity. Now, this economy, if this economy is not doing very well, there is always this fear in the market that if China, who is the leading importer of crude oil, economy is not doing very well, there's a high chance that they might reduce demand for oil, and this could influence the sentiment in the market too as well. So this recent report we got from China could cap the uptrend potential of the US oil spot. So besides all of this, we have other major events during the course of the week. We have the ISM Services PMI, we have the manufacturing PMI, we have the Fed Chairman's speech coming up tomorrow. We also have the average hourly earnings report coming up on Friday, and of course the almighty non-farm payroll report coming up on Friday too as well. So of this event too as well, the anticipation of this event definitely will influence the character of market participants in this market. Now, what we are going to be doing now is to go into the chart and let's look at things from a technical standpoint, which definitely will be revealing to us how the market participants have digested this information and what is likely going to be their next move. Now, for us to have a quick a deep insight into the current market structure, let's run through the higher time frame, and my first point of contact for today will be on the 4 hours time frame. Now on the 4 hours time frame, after taking into consideration the character of price action since the beginning of the month of June, it is quite clear that the market has been strongly bullish. And to emphasize this bullish momentum, you can see we have a couple of ascending trend lines. So we have the first ascending trend line right here, which you will see that after price broke above the structure during the second week of the month of June, price had maintained its momentum above the ascending trend line to emphasize the strength of the buyers in this market. Then we also have the second one here, which has only been respected once, and we may see price drop into this level if the first ascending trend line is breached and broken to the downside. Now, looking at things from a technical standpoint, having an ascending trend line on the chart, of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying that asset. The only condition that will make us sell is for price to break down the ascending trend line, selling pressure below structure. Then we can start considering selling. So as it is right now, it makes a lot of sense for us to continue to look out for buying opportunities. Now, zooming into the current structure, you will see that we have a couple of levels here. One of them which indicates the range bound structure here in the last couple of weeks. You will see in the last 2 weeks, price action has been confined within a $2 range bound structure that is between the $80 level and of course the $82 area, emphasizing the prevailing uncertainty in this market during this time frame. Now, you know how we treat our range bound structure. Of course, as long as price action remains within the range bound structure, we do want to exercise patience and wait for price action to either break out of the resistant line of the range to give us an opportunity to buy, or break down the support line of the range to give us an opportunity to sell. Now, besides the range bound structure is our key level for this week. I hope we all know what our key level is. Let me repeat myself on that one. So our key level serves as a yardstick to guide our trading activity for the new week that we are beginning. So what this simply means is that if price trades above our key level, we want to feel comfortable in a buy position, and if price trades below our key level, we want to be looking out for patterns and structures that support the idea of selling. Now, our key level, as you will see here, if I go to as far back as the month of March, you will see how that key level has played a significant role in determining the direction of price action. Now, look at what has been going on here since March. It has been a demand niche at some point, demand niche as you will see here, and of course we saw price break down the structure at the beginning of the month of May, and throughout the month of May, price action traded below the key level, which emphasized the selling pressure in the market. And in fact, the last couple of weeks we have seen choppy market condition where price action had been caught within a range bound around that key level. Now, with this information we have gathered here, you would agree with me that we are at a crucial juncture in this market. We are depending on how market participant reacts to this key level, and structure will determine if we are going to be buying or selling this week. Now, to have a deeper insight into what is going on around this key level, we want to scale down to a much more lower time frame, our 1 hour time frame, our execution time frame, to have an insight into what has been going on since this new week has begun. Now, scaling down into the 1 hour time frame, we begin to see things much more clearly. Now, look at what we have here. Price is still trading above our key level at the $81 area, and in fact the new week started on a bullish note. Now, look at what happened here. Price started the week around the $81.15 level, and then we saw price climb into the $81.55 before we saw our first resistance point, and then we saw price break out of that structure, then come back into that range. So we have a range bound structure now, which happened within the first, second, third, fourth, fifth, sixth, seventh hour of this week. We had a range bound structure, and you know how we treat our range bound structure. We wait for either a breakout or breakdown to give us an opportunity to either buy or sell. Now, with the situation we have here, you will see price action had already broken out of the $81.55 area, and I'm of the opinion that this bearish move that came back down could be the retracement of that breakout in anticipation of the uptrend continuation. So at this juncture, it makes a lot of sense for us to place a buy stop order above the $81.55 area in an attempt to continue the uptrend move. Now, if price continues to climb and find new highs, a breakout of the psychological $82 area will welcome more buy positions for us. So let's see how the market will play around this area. Now, in as much as we are looking out for buying opportunity at this juncture, we cannot ignore the potentials that sellers could also come in at any point in time. Of course, we do not know what the Fed chairman is going to be saying tomorrow. I'm very sure he will definitely want to give some hawkish remark just to support the US dollar from dropping. So he might want to say some things about keeping interest rate higher for an extended period of time, that maybe the data released by the US economy in the last couple of weeks isn't enough to judge if the inflation is gradually thinning out. So he might likely want to give some hawkish remark, which could incite some selling pressure in this market. So we need to also take that into consideration as well, so that we can be on standby for either opportunity that comes our way. Now, if it so happens that price action does not continue this uptrend and it's going to drop to the downside, what are the conditions we want to see on this chart that will make us feel comfortable joining a sell? Now, well, first of all, we should acknowledge the fact that price is sitting above an ascending trend line, and of course we'll need price to break down this ascending trend line for us to start considering selling. Now, with a support line within the $81.15 and the $81 area here, I would like to see selling only if price breaks down the structure. Now, not only just breaking down the structure, remember this level here has been a demand niche. Look at what happened here on Friday despite the downfall, and look at what happened during the midweek. We saw what happened here by pressure too as well. So it has a tendency, it has a memory for buying power. Now, what we are going to be doing is not placing a sell stop order in this case scenario, but instead wait for confirmation before jumping into any sell position. So what do I mean by that? If price drops, retest of structure, then we want to start considering selling this asset. So breakdown, retest with selling pressure. This we could see this on our lower time frame, 5, 10, 15 minutes time frame. Then we can start joining the bearish move to the downside. Now, there is a caveat to this bearish momentum. Now, if we join a sell below the $81.15 and the $81 area, as soon as price gets into that area between the $80.80 and the $80.50 area, we move all stop losses, secure the current sell position while we wait and see how the market will react to that structure. Now, why have I said this? Now, if you look at this, you will see that we have a descending trend line, as you will see here. Let's see. So after connecting the series of lower highs, and of course we saw the breakout of the descending trend line happen here, market came back to retest structure in an attempt to continue the uptrend. We may still see price come back, retest the structure, find buy pressure to continue the uptrend move. So this is why I'm saying here that if we sell, let's ensure that as soon as price gets close to the $80.80 level, we move all stop losses, secure the current sell position while we wait and see how the market is going to react to the structure to determine if we are going to be adding more sell position or probably getting ready for an uptrend continuation. So this is my simple view on the USOILSPOT for today. I have a strong feeling that price will continue to the upside based on the fundamental factors behind the scenes that we talked about earlier. So let's see how the market will play out, and trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us updates asset went due. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 10-15 seconds off. Let's see if we have any question whatsoever. And of course, you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I will see you in about 10-15 seconds, and don't forget to give the video a thumbs up. Thank you, guys. All right. So I see your comment here, Torres Master. Good morning to you. And you said, I hope the week will be choppy. No, a choppy week is not favorable to us, because it usually limits the potential for us moving significantly well in a particular direction. So it's not something we're actually looking out for. We do want price to move really well, and in fact, if we have choppy market condition, it should be as minimal as possible, so that we can have a clearer sense of direction in our market. So I see you, Edolas. Good morning to you, Edolas. I guess this is my first time seeing you here. How are you doing today? And Edolas is asking, are you going to look at gold? Yes, of course. I'm going to be looking at gold in a moment, and that's my favorite asset, and I cannot do without looking at it on a daily basis. So stay tuned in, as we shall be running through the XAUUSD in a moment. All right. Okay, so in the absence of no questions, I can see we have over 15 people on board. We are yet to have the like tally with the number of people. If you're yet to click on that like button, please do. This is one way to support the community to grow, and it goes a long way in inciting the algorithm to promote the video to a wider audience of traders who may find this content beneficial. And thank you very much as you do so. So with that being said, we will be diving right into the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this moment is the GBPUSD, the British pounds against the US dollar. And in fact, we're beginning to see some interesting trading setup evolve on the chart as at this morning. And I have a strong feeling that despite the uncertainty surrounding the US dollar, we may likely see the pound sterling take advantage of this uncertainty to run a momentum to the upside. In fact, I do have a buy position triggered already, though I've moved my stop loss to break even, so the worst case scenario on it will be break even. No, as at this point, I did not share a public video on the GBPUSD last weekend. Like I said earlier, I had time constraint. I was so busy, never had enough time to do it. But today we are going to be looking at this chart from the higher time frame. We are going to be doing a precise top-down analysis on this asset, and of course it will also serve as an opportunity for you to understand how to use price action based technical analysis to understand the correct market structure. So stay tuned in as I deliberate on this one. Now, before we go into the technical details on this chart, it's very important for us to also have a deep understanding into the drivers of this market. What are those things that are influencing the sentiment behind the scenes, which we see reflect on the chart as price action. Now, this week has started on a very strong bullish note, as you will see, and at this point, the pound sterling appears to be benefiting from the US dollars decline, which came after the US core PCE data last week Friday, coming in lower than market expected, and this has further incited the sentiment that the Federal Reserve may likely cut interest rate anytime soon. The PCE report showed that inflation is gradually cooling in the United States, as it came in at what figure? I think it came in at 2.6%. Yes, I think 2.6% as against the market expectation of 2.8. And of course, the previous month came in at 2.7. So it's a sign that inflation is gradually cooling in the United States, and this could further support the idea that interest rate will be cut anytime soon. But market are still very dicey at this point, as we still wait for the Fed chairman to speak. Whatever he says tomorrow will further give the market insight into how they will be positioning themselves for the next move. And of course, we had recent comments from federal officials who of course had reinforced the potential for interest rate cuts if inflation continues to decelerate. We had John Williams on Friday, who emphasized that inflation remains problematic and that the central bank will act to lower it if it is necessary. So a bunch of them has been looking forward to a potential interest rate cut. And then we also have from the United Kingdom the general election, which is scheduled for Thursday. That's in 2 or 3 days time. They are going to be doing an election there in the United Kingdom, and of course this has a tendency of influencing the sentiment in the market at this point. Now, according to the latest voting polls, I hope I used the right word there, the opposition Labour Party is expected to win over the Prime Minister Rishi Sunak's Conservative Party, adding another layer of uncertainty to this particular market. So it's going to be it's going to be a little bit choppy, I think, due to this uncertainty surrounding the market. So we need to be very, very careful whenever we take a position. So whatever position we take, we want to ensure that we move our stop losses accordingly to secure the position so that we don't get caught up in any sudden pullback that will happen. Then other factors behind the scenes are also the economic event from the United States that is coming up through the course of the week. We have the ISM Services PMI, we have the manufacturing PMI, we have the average hourly earnings, we have the non-farm payroll report, we also have the Fed chairman speech. All of these are going to be influencing the sentiment in this market. Now, let's run through the chart and let's see things from an holistic standpoint. Now, to look at things from an holistic standpoint, we will start from is it the daily? I think I'm going to start from the 4 hours time frame. Nothing really on the daily time frame. The structure from last week still remains the same with what we have here. So the most important one is the 4 hours time frame here. Now, if you look at the 4 hours time frame, after taking into consideration the character of price action since the beginning of the month of June, that's about 4 to 5 weeks of historical data, you will see here that the market has been bearish, finding series of lower lows and lower highs, and this has evolved into a descending channel. Look at what we have here. We have the support line of a descending channel after connecting the series of lower lows, and then we have the resistance line of that descending channel after connecting the series of lower highs. And of course, when price continues to trade within the descending trend channel, we want to be looking out for selling opportunities, and the condition that will make us buy is for the resistance line of the descending channel to be breached and broken to the upside. Now, besides the descending channel, here are a couple of levels. One of them is my key level for this week. Remember how we use our key level. If price trades above the key level, we want to feel confident in our buy position, and we only selling if price breaks down the key level. Now look at this key level here. I wouldn't want to go too far away. I will just go to as far as the month of March. You will see how the 1.26150 area had played a significant role in determining the direction of price action. It has been a demand niche at some point in time, as you will see here, before price broke down the structure in the month of April. And fast forward to the beginning of the month of May, we saw selling pressure around this area. Mid-May, price climbed up, and since then, price action had been trading above the key level. And from a technical standpoint, whenever price, theoretical standpoint, let me put it that way, price breaks out of a key structure like this, we expect at some point in time, price may come back, retest the structure in an attempt to continue the uptrend move. Now, with this understanding in mind and taking a closer look at the structure, you will see that in the last couple of weeks, price action has come back into the structure, begging the question if we are going to be seeing a retest of structure, making this whole area a platform for new highs. As you will see, every attempt by the sellers to break through in the last 2 to 3 weeks had failed at every point in time, giving us signs that this might likely be a robust demand zone to continue the uptrend move. Now, taking it a step further again, looking at the whole structure after the whole strong impulsive bearish move that started mid-month, you will see we begin to notice something like a reversal pattern in the form of a double bottom structure, where the neckline of this reversal pattern sits at the 1.26550 area. And look at how beautifully this neckline shares a confluence with the resistant line of this descending channel. Now, you know how we treat our reversal patterns when we identify them. We want to wait for price to break out of the neckline to give us an opportunity to buy. And in fact, this was the idea behind my buying this asset this morning, as I have about how many pips? I have about 17 pips running in profit at this point in time. And like I said earlier, I have moved my stop losses to break even, waiting to see how the market is going to react to the structure. Will it be a false breakout, or will it be a valid one to continue the momentum to the upside? So for those of you who had actually taken advantage of this momentum despite not seeing my update, well done to you. It means that you really are getting in tune with our analytical approach in this community. Now, with the situation we have here right now, you will agree that we are at a crucial juncture where we have the resistant line of the descending channel and the neckline meeting at a point to make a significant confluence. Now, what we want to be doing now is to see how the market has been reacting to this confluence since the beginning of the week, to give us an insight into where price is likely going. One of the two things we are going to get to understand here is if this breakout is a true one or a false one, or we are going to see price drop back below the descending channel to continue the downtrend scenario. Now, with this information we have here, let's scale down into the 1 hour time frame. And right here on the 1 hour time frame, this was what I was able to come up with. The week has started on a strong bullish momentum. As you will see, price started at around the 1.2640 area, climbed into the 1.26650, our first resistant line for this week, as you will see right now. And then we saw price broke out of the structure. I took advantage of this opportunity right here at the 1.26550 level, and then I moved my stop loss to break even. And of course, I also have another buy position triggered at this point at the 1.265. So at this point, we are having a bullish bias at this point in time. For those of us who capitalize on this opportunity, well done and kudos to you. But for those of you who had missed out on this opportunity, it's all well and good. There's no reason for us to bang our heads right now, as we're going to exercise patience and wait to see how the market is going to react to the structure. Now, the first thing we are looking at here is this resistant line of the descending channel we saw on the 4 hours time frame, which was broken. Now the question here is, Is this breakout a true one or a false one? Now, we should not panic with this bearish candle we saw here at all, because price may likely come back to retest the structure to continue the uptrend move. So we are still within buyer's territory, if you would ask me. So anywhere between the 1.2665 and the 1.26500 area are still promising area to buy the GBPUSD, and of course all stop losses should be right below this descending trend line, and ensure you give enough breathing space for price action to move around, as we could see some extended sideways trading activity during the first half of the week before price now gains some traction. So we remain bullish on this one, and the only condition, hold on a second, I'm beginning to see that we include an ascending trend line, which is going to be playing a significant role in guiding our decisions for this week. So connecting the series of higher lows here, we have a structure here to guide our momentum. So I want you to mark it out on your chart. So this trend line here is going to be playing a significant role. So if price drops within this old structure, we are still within buyer's territory, looking out for reversal patterns to continue the uptrend. However, if price breaks down this ascending trend line and a retest of structure, this will give us a beautiful opportunity to continue the downtrend move. Now look at how beautifully we have a confluence. We see the descending trend line here. If price breaks down this support line at the 1.264, price will be below the descending trend line, and of course will be below this ascending trend line as well. So it's a very, very promising area to look out for selling opportunities on our lower time frame to join the decline. And if price continues to drop, then we look at the key level at the 1.26150 area to continue the downtrend move. So that is how we are going to be managing our position on the GBPUSD. So we currently hold on to a bullish bias, looking out for more opportunity. And in fact, if you look at this structure here, I think we have another resistant line. This is the highest point price action has been for this week, and that's the 1.26850 level. So I encourage us all to mark that level out on our chart as well. We are going to be using it to guide more trading opportunity around this area. So I'm going to be marking it out. So 1.26850. So placing another buy stop order above that structure makes a lot of sense to continue the uptrend continuation. Now let me quickly clarify this ambiguous situations as regards to breakout of structure. So how we usually do it here in this community is this. So at the beginning of the week, we place our buy stop order at the first resistant line, or sell stop order at the first support line of the week, and then when we make profit, we can continue to place more buy stop order to capitalize on more opportunities, as we have the leverage on banking on some of the profit we had made to test waters around these key levels. But if you are joining for the first time and you are not part of a profitable journey, what we usually do is break out of structure first of all, then price comes back to retest of structure, maybe on the 5, 10, 15 minutes time frame. Then we can join the uptrend continuation. So let's see how the market is going to play out. Will this momentum continue? Well, are we going to be having a retest of this resistant line of the descending channel we saw on the higher time frame? Or will price action break down the 1.264 to inside selling opportunities? Of course, I will be with you in the comment section of both my TradingView and Telegram platform to give us update hazard when due. So if you have any questions as regards to the current market dynamic or anything about financial market matters, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the final asset on our watch list for today. And do not forget to give the video a thumbs up. Your likes are valuable to me, and ensure you mark out this level using this time, as you will be needing them as a reference point to guide your trading decisions today. See you soon. All right. So, in the absence of no questions, I want to take this as a confirmation that we are all on the same page. So, with that being said, let's move on to the next asset on our watch list, the final one on our watch list. I do hope you've marked out these levels accordingly. Please, those trend lines are very, very important. Let's see how the market plays out around the structures. All right, so the final asset we are looking at for this week is going to be my favorite amongst them, which is the XAUUSD, popularly known as the gold spot. And what an interesting trading setup we have this morning. I have a buy position triggered already, looking for more buying opportunities to continue the uptrend scenario that it's looking like this morning at this point in time. So as the new month begins, gold appears to be oscillating within a range bound structure, reflecting the mixed fundamental clues behind the scenes that is influencing the sentiment in the market. As you will see, since the new week has begun, price action has been confined within the 2,330 and the $2,319 level to emphasize the prevailing uncertainty in this particular market. Now, let me quickly run this so that we don't get things mixed up. I'm not doing a top-down analysis on the XAUUSD. I did one during the weekend. I have the video published already, and if you had missed out on that video, you can check the links right in the description box below. It's right there. It will refer you to that video, and you can see how I was able to identify the key levels we are going to be using for this week, the major trend, and how we are going to be using that in conjunction with the lower time frame to make a well-informed decisions. Now, going back right into the business, it's very, very important that we also keep tabs with the fundamental factors, the fundamental drivers that is influencing the sentiment in this market. And being my favorite asset, I have something to share with you guys this morning as regards to what the fundamental drivers in this market are. Now, looking at what you have on your screen, you will see I have four major drivers that will be influencing the sentiment in the gold market this week. One of them is the Federal Reserve rate cut uncertainty, which is bringing these choppy market conditions we've seen in the US or the XAUUSD throughout last week. As you will see, the key US inflation data released on Friday reaffirmed market bets that the Fed will likely cut interest rate in September and December. However, I made mention of this earlier that we still have hawkish remarks from Fed officials during last week who have emphasized that they will be adopting a wait-and-see approach before deciding to cut interest rates. So that brings some level of uncertainty into this market. Then we also have the US dollar movement. The US dollar has been extending its corrective pullback from a 2-month peak following the post US PCE data. It wasn't an encouraging data at all. That reflected and also affected the US Treasury bond yield, hereby lending support for the price of gold. Now, another thing that could be supporting the price of gold this week is the geopolitical tensions in the Middle East. We've had persistent geopolitical risk from the Middle East, Israel opening a war front against Hezbollah in Lebanon, the Hamas-Israel situation, the Ukraine-Russia situation, and of course the situation in France too as well will all be a major factor influencing the sentiment in this market. Then finally, we are looking at the US high impactful macroeconomic data. We have the upcoming ISM manufacturing PMI, the ISM Services PMI, the average hourly earnings, the Fed Reserve Chairman's speech, also the almighty non-farm payroll, all of which are going to be playing a significant role. And of course, we know that as this event draw near, there is a high chance that market participants will behave in a certain way as the event draws closer. And this way they behave usually forms a pattern on the chart, which of course we are going to be using to strategically position ourselves for the next move. And of course, we're beginning to see some pattern formation this morning based on the current structure. As you will see here, we have a range bound area where price has been confined within the 2,329.50 and the 2,319 since the beginning of this month. Now with this situation here, we just need to exercise patience, and of course I'm looking at the nature and character of this candle that tested the lowest point for this week at the 2,319, which is more or less looking like a hammer candle, and theoretically our hammer candle tells us that buyers are still present in the market. Now if we go to as far as, let's say, Monday's trading session last week, look at how that 2,319 area has been known to negate selling pressure. Now look at this. On Monday of last week, we saw how sellers found it difficult to break through. We saw a breakdown here on Wednesday session, and then we saw what happened right here on Thursday. Price climbed back above the structure, and price had continued to stay afloat the structure. Now this morning, as soon as price got there, we saw a sharp rejection, revealing that this area still has a memory for buying power. Now with the situation we have here, we'll continue to maintain a bullish bias as long as price remains above the structure, and if price goes ahead to break out of our key level at the 2,330, which interestingly shares a confluence with that descending trend line we identified in our recent video on the XAUUSD, that will definitely welcome more buying opportunities and give us confidence to continue the uptrend scenario. However, in as much as we're looking out for bullish potentials, in as much as we're looking out for possibilities of price continuing to the upside, we cannot ignore the potential that sellers can also come in. Of course, we do not know what the Fed chairman is going to be saying, but I have a strong feeling that it will be more hawkish just to save the face of the US dollar. And due to this, we may likely see a resurgence in demand for the US dollar. We never can tell, and we don't know what the data for this week is also going to be saying. Probably it's going to be giving some resurgence in the US dollar. But in any ways that happens, if the dollar is going to rise, then we want the price of gold is definitely going to drop. So we have a condition here to guide any selling opportunity. So since we have a range bound structure, we are going to be looking at selling only if price breaks down and retests the $2,319 area to the downside. So that is the only condition that will make us sell the XAUUSD this week. Now another thing I would like to call your attention to about this whole structure is the potential of a reversal pattern forming around this area as soon as price action tested that descending trend line we identified on the 4 hours time frame. So to give a visual representation of what I'm talking about here, you will see after this impulsive move all the way up here, you can see the left shoulder of a head and shoulder pattern. Look at the head right here, and of course we begin to notice a possible right shoulder where the 2,319 area could be serving as the neckline of that reversal pattern. And look at how beautifully it shares a confluence with the support line of that range bound structure we identified earlier. So it all shares a important area to look out for selling opportunity if price action breaks down and retests that structure. But trust me, I will be with you in the comment section of both my Trading View and Telegram platform to give us updates as at when due. And of course, we are going to be running the XAUUSD live window today, 5 to 10 minutes into the New York session. We are going to be kickstarting the XAUUSD live live window where we all come together to monitor real-time price action on the XAUUSD asset. So it goes on throughout the New York session, the first 5 to 7 hours of the New York session, depending on the volume of trading activity for that particular day. So I look forward to seeing all of you in that on that platform. Let's see how the market will play out. I have a strong feeling that price will go to the upside, but if it drops to the downside, we are also ready to capitalize on that opportunity. Now, for the link to the XAUUSD live window, you will find it immediately after the end of the session. I encourage you to click on that link, click on the notify me button so you can get notified as soon as we come on live. So with that being said here, let's see if we have any question. Do you have any questions whatsoever before we start rounding off on today's Forex Morning Mastery? Okay, so I see your question, C40. C40 is asking, do you close profitable positions on the weekend? What about those with drawdowns? All right, very good question there. Well, I do not usually do this, closing my trades, be it profitable or losing one during the ahead of the weekend. I don't normally do that before. But in recent time, I have made it an habit to close all positions before the market close on Friday. And this is simply because of the era we are in right now. It's the geopolitical tension era, the Middle East situation, the Russian-Ukraine war. A lot of things is going on in the financial landscape, which could trigger anything in the market. Now, leaving a position over the weekend in this kind of era doesn't seem reasonable to me, except that you are a positional trader who has a wider range of stop loss to contain the volatility that might likely happen around this area. But if you a short-term trader, I won't put a short-term trader, those who have small pip size stop loss areas, I always advise that during this era that we are, it is advisable to move your stop losses up, close all your positions ahead of the weekend. So that's basically what I do, and it's due to the geopolitical tension era we are in. So I hope I answered your question, C40. If I didn't, let me know in the comment section. All right, so okay, you're welcome, C40. All right, so in the absence of no further questions, I think we have come to the end of today's Forex Morning Mastery. You guys have been very, very wonderful. I really appreciate your support so far. For those who had clicked on the like button, thank you very much from the bottom of my heart. I really appreciate it. Inspires me to do more, and of course it also helps the algorithm to promote the video to a wider audience of traders who may find the content beneficial. Today we were able to take on the 3 financial instruments that we are going to be monitoring for this week: the USOILSPOT, the GBPUSD, and my favorite, the XAUUSD, popularly known as the gold spot. And of course we have some interesting trading setup after using our basic tools such as the trend lines, key levels, and chart patterns to unravel the potential direction of price action this week. Sincerely, I have a strong feeling that we are going to be looking at some strong volatile move this week due to the economic event, and of course the fact that we are at the beginning of a new month. So let's see how the market will play out. Of course, I will be with you in the comment section of both my TradingView and Telegram platform to give us updates as at when due. I do hope you marked out these levels and structures we identified on the chart. Please do. They will be playing a significant role in guiding our decisions. For those of you who had draw out your structures and lines, well done to you. So all we need to do now is exercise patience and allow the structures to mature. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure you have a well-defined risk management strategy in place. For those of you who join in for the first time, I do hope you had a wonderful time with me. I hope you are able to gain one or two things from what we have discussed here this morning. Trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help you in improving your own trading strategies. So I look forward to seeing more of you. Same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for another potential volatile second half of the week. So it's on this note I would like to wish us all the best of luck, and do not forget to click on the link to the XAUUSD live window immediately after the session. Click on the notify me button so you can get notified as soon as we come on live. So it's on this note I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.